also is disappointing. We can promise you that the content and the speakers are going to be exceptional. This morning we have Tim and Chris. Tim is from Plunkett Cooney, Chris from National Interstate, and they're going to be talking about a number of topics that are relevant to the transportation industry, as well as any organization that has a fleet of vehicles operating on their behalf. Talking about negligent entrustment, the reptile theory, deposition preparation, and a number of other great topics that are quite timely for the times that we're living in. So with further ado, we would like to introduce our two speakers, and we'll turn it over to them.
All right. Thank you, Jordan. I appreciate it. Thanks for having us today at Oliver Van Dyke. I appreciate the opportunity to speak to everybody. I want to make sure everything seems to be working. Trust all the team here at OVD that we got it going. Everybody can hear us and see the presentation. So I'm Chris Michael. I'm with National Interstate. I'm the Vice President of our National Accounts and Truck Alternative Risk team. And I'm going to talk to you a little bit about the state of the trucking insurance market, commercial auto insurance market, why the market is in the state it's in, and really what you can do about it if you're a motor carrier, and how you should see the state of the market as an opportunity. So we're going to go through, I know Tim and I are going to just try to go back and forth here. If there are questions, as I understand, you could chat them, and then Jordan will be lobbing those questions to us. So again, appreciate the opportunity to speak with everybody here. So the state of the commercial auto or trucking insurance market, I tried to think of one image that would sum up the state of the market. I'm from Cleveland, Ohio, so I thought about a picture of any Cleveland Browns team from the last 20 years. This quick picture right here to my right on your screen is, I think, an accurate summary of the commercial auto insurance market. It is a train wreck. If you are paying attention at all, if you read Transport Topics, Freight Waves, anything in the news, you would see stories of motor carriers going out of business because insurance prices have risen so dramatically. You'd read about these massive jury verdicts. Yesterday in Florida, there was a verdict for $411 million just yesterday in Florida against a one truck company. The state of the market is really getting pretty tough, pretty hard, pretty firm, and prices, especially in the excess layers of insurance, have risen pretty dramatically. So we'll talk about why in a second. All those headlines I just showed you were pre-COVID. So COVID has further complicated the insurance industry in a number of ways. There's been several second and third order consequences of COVID that the industry is really still trying to make sense of. For example, we had a long discussion at dinner last night about what has happened with accident frequency and accident severity since really the world slowed down significantly in March. Frequency of loss has dropped. Roads got a lot less congested. The problem is people started to drive like maniacs. And so there was an article just this weekend in the Wall Street Journal about how fatalities have risen. They were up 36% nationwide in the month of May. Again, people are taking advantage, or were for a while in the second quarter, taking advantage of roads that were empty and then getting into some pretty serious wrecks. So as an industry, positive is the frequency seems to drop a little bit, but the severity, i.e. the big crashes, the fatalities, were actually rising year over year. Right now, again, the insurance industry is trying to figure out as a whole, and I'm talking the bigger property casualty insurance industry, there's ripples all the way across that will affect trucking and workers' compensation, especially most states. As everybody knows, all the insurance is controlled by the state. Every state has had mandates for insurers to either start to pay or to make sure that they're not collecting premium for a while. And it's been very interesting to watch, how coronavirus here is starting to go through the system. And it's just going to be great for lawyers for years, I think, as we'll start to talk about. But COVID, there's been lots of questions about how that has affected things. It's not positive, I would say, on net, not positive. Workers' compensation has been a bright spot for those motor carriers out there that have to buy workers' compensation insurance. That line of business has been pretty steady, if not falling, rates falling in the last several years, a softer insurance market. It seems like anything you read right now in the industry would say that COVID is causing workers' compensation insurance carriers to check the brakes, and we might be at the bottom of the market with workers' compensation. That's what it seems like at this point. Okay. I call this the truck insurance reckoning that we're in. And I promise you, there is a silver lining that I will get to. It sounds like there's a lot of bad news right now, but I see it as a big opportunity. And again, I'll explain why. And, hopefully you come away from this saying, this is pretty interesting. And right now, if I do things, if I do certain things, I can separate myself as a motor carrier from my competition who isn't as visionary as me or as safety conscious or those kind of things. We'll get to that in a second. But I want you to imagine for a second what it would be like if you had, as a motor carrier, and I'm speaking to the motor carriers out there, okay? I want you to imagine if every load that you accepted was contingent upon, at some point, you could accept a load. Somebody says, hey, here's the load that you can accept. However, at some point, and it might be a month from now, it might be 6 months from now, it might be 3 years or 10 years from now, I'm going to send you a bill for fuel. And that bill might be $100, it might be 10 grand, it might be $1 million. Would you accept the load? That is exactly how insurance works. I mean, when we sell our product, when we give the policy, when we agree to accept the risk, we do so contingent on at some point we could pay a loss. And underwriting, trying to price the risk, is equivalent to driving a car by looking in the rearview mirror. When you're trying to look at past history to predict where the future will go, and in some respects, it's like rolling the dice in a casino, and that is the tricky part of insurance. Insurance carriers get in trouble when they take on a bunch of premium, they take on a bunch of risk, and they don't see problems down the road, or they didn't account for future increases in claim severity that are going to come and bite them. One of my favorite quotes is by Warren Buffett, which says, "Only when the tide goes out do you discover who's been swimming naked." And this is a great analogy for what has happened in the truck insurance world in the last 4 or 5 years. Lots of insurance carriers got into the market, when times are good and insurance carriers are making money and there's excess capital out there, people want to get into it. They see, oh, there's premium there, I can, and then if you don't know what you're doing and you don't know how to analyze the good risk from the bad risk, down the road, the claims come through and then you are underwater. And that is what has happened here in the last few years. The reality is the commercial auto insurance world is unhealthy right now. They're losing 10 cents on the dollar. The combined ratio is like operating ratio. So insurance companies, they judge themselves on combined ratio. Same thing as operating ratio. Anything over 100 and you're losing money. Anything under 100 and you're making money. Problem is, insurance carriers can run at 105 combined ratio or 110 combined ratio and actually still make money because of investment income. Again, Warren Buffett, he loves insurance because he's playing the float, making the investment income on taking the premium in, paying the claim later. In today's interest rate environment with rates near zero, it is really hard to make the investment return you need. And so you need to run under 100 if you want to stay around for any length of time in the trucking insurance business. So on average, trucking insurance carriers in this space are spending taking in $1 and spending $1.10. That's what in the last several years. It's predicted to continue for the foreseeable future, even as they have taken rate increases. Okay. I mentioned the analogy of, would you accept a load if contingent upon at some point somebody sending you a bill for $1 million for fuel, just out of the blue, randomly? Even if it was a low probability event, would you accept it? Well, the problem is that's what's happened in the insurance world, that we've had more large claims come through. That's called adverse loss development. You anticipated paying X number of claims, and today you're paying X plus 30%. And that extra 30% wasn't accounted for, and it is crushing a lot of insurance companies that didn't know what they were doing, or didn't choose the right risk. Okay. A couple more slides, and then we'll start to get into some of the, what you can do about it, and some of the other things driving it here. But, insurance industry is very cyclical. It's a lot like trucking. I always talk to motor carriers about how, in many ways, if you really understand and analyze the industry, our industry, insurance, is very similar to trucking. They're very cyclical. People view them as a commodity. In trucking, it's all about capacity and the number of trucks out there. In our world, it's about capital, how much money is money is out there willing to get into, making these bets, taking this risk, what kind of return you can get on it. And if you look at this chart right here, the return on equity is way down in the industry as combined ratios have gone up. It obviously is inversely proportionate. And so there's really been negligible returns for the last few years in the industry. Again, causing the remaining insurance carriers to say, we got to do something about this. Here is the really frustrating thing. We'll spend time talking about this. Loss severity, rising severity. Okay, we've done a lot of things to try to combat frequency of loss with all the technology that's on the trucks nowadays, the Bendix Wingman, the front collision avoidance. All of those things are good, and they're helping to keep frequency in check, frequency per 100 million miles, per million miles. The problem is the average claim is costing a lot more. In 2012, just 8 years ago, the average jury verdict against in a claim involving a trucking company was $2.6 million. And you probably, a number of you, if you have seen any of the A-tree studies or read any of these articles in Freight Waves, in just 7 years later, the average jury verdict was up 5.5-fold to $17.5 million. It's crazy. So if you're an insurance carrier 5 years ago and you're trying to price the risk and you're trying to guess as to where the claims are going, you do not see this coming. And that's the rub right now. Okay, here's the bad guys. Truly. Some people are aware of this, and I would say a minority of the motor carriers I talk to are aware of this, and you need to know about it. There is a growing industry, a large and growing industry of litigation funding. Plaintiffs' attorneys that are being funded by hedge funds and private equity money to try and milk marginal claims involving a trucking company and hit the jackpot. So again, Tim and Tim doing the noble job of defending the motor carriers. We'll talk about some of this, but it's very frustrating now that there's billions of dollars going into funding some plaintiffs' attorneys that all they're doing now is trying to look at a bunch of claims and say which one is the claim that I can hit pay dirt on. And they're running a playbook that called reptile theory that I'll hit in just a second. There's an attitude now, and I'm sure that there's going to be some heads nodding out there that in America that we call social inflation, which is the mentality that, you know what, they've got deep pockets, that insurance carrier has deep pockets, that motor carrier has insurance limits. We deserve it. That seems to be the prevailing mentality, and what these plaintiffs' attorneys are doing very skillfully to make these marginal claims that a couple of years ago maybe would have had a defense verdict to suddenly be worth millions of dollars.
And that is really interesting. I practice here in Grand Rapids. I have about 27 years. I'm with Plunkett Cooney. We're right here in West Michigan. But you simply drive between Chicago and Detroit, and the billboards are unbelievable with the plaintiff's personal injury attorneys in terms of what's going on. It's very clear out there. The message is anti-motorcycle drivers and anti-truck drivers. And you see those signs everywhere in the Midwest. I'm often between Detroit, where our main office is, with Plunkett Cooney, and Chicago. We have an office there too. Luckily, I practice here on the civil defense side, a lot of transportation litigation in West Michigan, where it's certainly far more conservative. But a real trend that I've seen, for example, any of you in West Michigan, the plaintiff's personal injury attorneys in Detroit have all opened up offices the last 5 to 7 years in Grand Rapids. They've come to Grand Rapids because of the growth in the area in terms of population, and there's more money here, quite frankly. I'm sure that's happening in other areas as well, but it's certainly evident that the general public out there, the years I've been litigating, it's not favorable to be operating a motorcycle, operating a truck, and that becomes very, very difficult. I had not seen numbers with that huge of a change, but it doesn't surprise me in terms of average verdicts. Typically, what I experience here in West Michigan, my practice is so much of this stuff. Ultimately, you're not going before a jury, you're going before a mediator and trying to resolve if you can, because you can get easily the runaway jury situation that makes it very, very difficult to defend. The other issue in Michigan too, as folks know, is we're a no-fault state, which is a whole other animal in terms of dealing with the situation. So that is present as well. But unlike Texas or California, Florida, New Jersey, fortunately in West Michigan, where I've practiced my whole career, it's certainly more favorable to defense to conservative juries. But it's so jurisdiction specific.
It is, and like you and I talked yesterday, so Tim and I were talking about how in Western Michigan here, it's certainly more conservative, more favorable venue. If you are involved in an accident that ends up getting litigated than it is on the eastern half of the state.
Right.
The problem is the eastern half of the state is going to move this way.
Right.
That the world is, we call them jurisdictional hellholes. And we do national interstate, we do business in every state. Let me tell you, you don't want to run a motor carrier in California, in Louisiana, Jersey, Illinois. It is tough. There are parts of the world that are very, very against the motor carrier, where the deck is stacked against you. And so, yeah, for now, it's, it might be okay in Western Michigan. You got to be aware of this stuff and preparing for it, right?
It's changed dramatically. Yeah. In the 20 years I've been here, it's certainly become very, very more plaintiff oriented. There was a case in Kalamazoo a few years back, about 7 or 8 years ago, where the key issue was conscious pain and suffering. And I think the decedent had somewhere in the neighborhood of 1 to 3 hours of conscious pain and suffering. The case was tried. I think liability was disputed. I was not personally involved with the case, but I know the jury returned a very, very large, somewhere in the neighborhood of $12 to $15 million verdict, based upon the plaintiff's attorney, frankly, doing a pretty good job with the issue of taking each minute of conscious pain and suffering, putting a dollar figure on that, and then multiplying it for the total amount of the conscious pain and suffering. So that component of conscious pain and suffering, at least in Michigan, is compensable. And what plaintiff's attorneys will do is they'll put a figure on it. I want $100,000 per minute. I want $75,000 per minute. Well, that adds up pretty quickly, and it becomes the cases I've had that have gotten very, very high. That element of conscious pain and suffering has been a significant part of the jury verdict or the settlement discussions.
Yeah. So we'll talk about reptile theory now. So reptile theory, I'm guessing that some of you out there have heard of it or aware of it. If you're not, you need to Google it today. Google reptile theory. And this is from two enterprising plaintiff attorneys in 2009 that wrote a white paper about how to make a very marginal claim and take that claim and make it into something very big. And they call it the reptile theory because it really is about trying to play on the part of the human brain that is the oldest, the reptilian part that is fight or flight, to try to make the other party feel like a menace, threatening, scary, and really out to harm you. And so that's what the plaintiff's attorneys are doing, is running this reptile theory playbook, and you need to know how to combat it. And it's about preparing correctly in a deposition. It's about, and we could talk about that in a second. I'd be curious to get your thoughts on it, Tim. It's about making sure you have your house in order so that you do not open yourself up to the potential large verdict. Making sure you don't have a marginal hire, that you aren't cutting corners, that you're doing what your safety manuals say you're going to do, that things match, that you're actually doing what you should be doing. So reptile theory is the way I liken it is every Monday morning in their giant wood paneled conference room, the plaintiff attorney that you see on the billboard gets together with his staff, and he says, okay, what claims do we have this weekend? And they go around the room and they say, such and such, here's this claim, here's this claim. It is not about the facts of loss. It is not about the facts. It is about how can we make that motor carrier look bad. Doesn't matter if they're not at fault. In the classic example is the Werner trucking verdict from a few years ago. And I'm guessing that some of you out there are very aware. But that is the claim where the Werner truck was doing nothing wrong. Going down the highway in Texas, there was some icy rain. He was under the speed limit for the conditions. The logs are good. The truck is good. There's no issues with lights or constant tape, anything like that. Everything's good. Pickup truck loses control, comes across the median, right into the Werner truck. Fatality, serious injuries, horrible, horrible claim. Awful. That Werner truck did nothing wrong. There was zero culpability. And as we all know, or as many know, Werner got hit with an $89 million verdict. Why? Because it had nothing to do with the facts. The facts said that the woman who had lost control of the pickup was at fault. However, the skilled plaintiff attorney was able to say that Werner cared more about the almighty dollar. They cared more about moving freight than they did about the motoring public. And they were able to demonstrate that Werner had cut corners with their hiring guidelines and, certain things in the deposition, the way they take the safety manager down a path in the deposition to say, shouldn't the driver be more aware of the conditions? Doesn't that driver have a duty of, you need a CDL? Isn't that require shouldn't that require a higher duty of care? Yes, they take them down a path. And suddenly the jury says, man, Werner, they shouldn't even be on the road. That woman would be alive if that trucking company didn't care so much. That truck shouldn't have been on the road. It's their fault. $89 million. That is reptile theory. And that's what you have to prepare for.
And it does, as Chris said, it really takes place in the depositions with a skilled claims attorney. The areas I see it most is in a trucking case. Also happens a lot in the medical malpractice arenas where you'll see it take place. I've got a lot of partners throughout the state that handle med mal cases, and that's typically what they're doing. What the plaintiff's attorneys will do with it is really try to make the jurors think in their mind that they're the ultimate protector, enforcer of perfect safety. That basically if anything goes wrong, you, Mr. or Mrs. Juror, have to take care of that, remedy it, correct it. And they'll do it, as Chris said, with a safety director, and start with that and with that deposition, and then with the driver in terms of trying to put in their mind, and really what it gets to is changing the duty perspective. The duty of any driver out there in a passenger vehicle, motor vehicle, is to be reasonable for the conditions, but it's not perfect safety. People know driving out there, things happen. People go beyond the speed limit. People are inattentive at times. Things take place. There's other motoring vehicles out there that take place and have issues. And so nothing's perfect, but that's how the line of questioning will be, basically to the point where, Mr. Safety Director, isn't your job to ensure that package gets from destination from point A to point B completely safe without any issues? Isn't your job to ensure that all of your drivers are completely perfect in obeying every rule of the road and do nothing wrong? Isn't your job to ensure that there's absolutely no accidents out there, and they'll try to change basically the standard of care, that duty element with respect to a no fault with an automobile trucking matter, and heighten that duty. And that's where, frankly, a good defense attorney on behalf of the trucking company has to prep that safety person, has to prep the driver, stay within your lane, basically. Talk about the duty is a reason. In Michigan, it's a reasonable standard of care. It's not a heightened standard of care. In medical malpractice, it frankly works even better, because you can imagine deposing a surgeon or a doctor. The plaintiff's attorney using the reptile theory is going to say that every surgery has to be successful and every surgery has to be safe. Well, that's nonsense. That's not the standard of care with respect to a doctor. It's what's reasonable for that specifically, an orthopedic physician, a cardiologist, whatever. Surgery in itself is not completely safe. Driving a semi-tractor trailer on the highway is not completely safe. There are inherent risks with respect to other motorists, with respect to the weather, with respect to equipment, any number of things. But you go down that road with a skilled plaintiff's attorney that gets the safety person, the driver starting to acknowledge and accept and agree to it, it really presents a problem, because then, as Chris said, the jury is sitting out there and the theory becomes, you, Mr. and Mrs. Juror, have to make this a completely safe, foolproof operation. And if anything went wrong, they've got to be the bad guy and they've got to pay for it. So in prepping drivers and safety folks for depositions, it takes a lot of time. It certainly is done well in advance of the deposition, and it's giving a lot of hypotheticals and making it clear to them what exactly the duty is. It's being reasonable for the circumstances and nothing more and nothing less, and get ready for these types of questions that kind of lead you down the primrose path. What I always tell drivers that I'm defending is be prepared to be kind of boxed in. The plaintiff's attorney's job is basically to box you in with respect to specifically speed, distance, measurement, timings, so that they can then take that testimony and take it to their accident reconstruction expert, their conspicuity expert, whoever, and have something to work with. And I tell my clients all the time, an answer of I don't know or I don't recall is completely acceptable. If you don't know if it's 5 car lengths or 10 car lengths, or you don't know the distance between the time you first applied the brakes to the time of the impact, you simply make it clear, I don't know. If you can give an answer and it's honest and truthful, and you can give an estimate, you do that. But too many times people are left feeling as though they're compelled and they're intimidated by the process. They have to give a response. If they don't know, you simply say, I don't know. But the goal of the plaintiff's attorney, and typically the depositions, is to get boxed in the driver, the safety person, so they can then take that information to their accident recon expert and help to basically develop a theory, a plan in terms of what took place. A lot of that's eliminated with ECM, with some of the different downloads and things that you can really, pinpoint precisely what took place. I mean, I'll get all different types of statements from the plaintiff who's injured, from a driver. When you've got the download in the passenger vehicle and the semi-tractor trailer telling you exactly what took place 5 seconds from the impact, that takes away a lot of the gray area. But so many times people feel compelled to start getting estimates in terms of distance and timing and sequencing, and it just really becomes problematic, because then you're locked into that testimony. I'll have 5 or 6 witnesses observe a motor vehicle accident, and every one of them has a different version as to the type of vehicle, the color of the vehicle, what the color of the light was, how far the car was away from the light in the intersection. It becomes very, very difficult, very fact specific.
Yeah, I think that a good defense attorney is going to help you see that a lot of times the answer is it depends, and you mentioned safety, and there's such an interesting misperception of what safety is. Here is how you define safety. Safety is the absence of risk. That's it. If you want to be safe, and if your mantra is safety is job one, you're fooling yourself. Okay? When I hear people say safety is job one, I kind of say, okay, I understand the sentiment, but it's not true. Because if safety was job one, you would park your trucks. The only way for you to be 100% safe that something might not go wrong is to not move a truck. You'd keep them on the lot. Trucking is inherently a dangerous activity. There's no way around it. And like Tim said, there is a reasonable assumption of risk out there. And if you're trying to do everything you can to mitigate risk and to follow the law, and that is great. But sometimes things go wrong. We have to accept risk. And the trick then is to how do you mitigate it? How do you manage it? And then if something happens, what do you do about it so that you can contain it, you can protect your reputation, the assets of your company, all of those things, okay? So just a couple other things, and then we'll get into what you do about it here. What else is driving these rates higher? Of course, okay, roads are congested, they're in disrepair, we need an infrastructure bill, or drivers are getting older. It's a tough job, and the driving force is getting older. It's hard to find good younger drivers. It's a tough job. And guess what? Everybody's staring at their stupid phone the whole time. I drove up here from Cleveland, and half the people we drive by are staring at their phone. It's ridiculous. So it's very dangerous.
And in litigation, everyone, I think it's obvious, one of the first things that takes place, both defense attorneys, claims attorneys, are going to subpoena the cell phone records and get those all the time. And you'll have completely inconsistent stories in terms of when they last sent the send for the text or when they took the phone call, but invariably, those are always subpoenaed. They always come out, and it usually is not good news typically because, as Chris said, I find you just look around, people are constantly and consistently using their phones, be it a call, a text, navigation, whatever. But those, if anyone thinks that their drivers and me as a defense attorney are not going to subpoena and get cell phone records, it happens almost every time you're dealing with a litigated case involving motor vehicle crashes because it's so key and so pertinent. I had one recently, it just got resolved through mediation, where the driver had just hung up on a call to his wife about 30 seconds before the impact, and candidly had missed that the traffic was slowing ahead on I-96 between Lansing and Grand Rapids with respect to construction ahead. That was a big problem for my case because he frankly, the testimony was, it was several minutes, 10 to 15 minutes before that the phone call ended, but the phone call literally ended seconds before the collision. So that was a problem for me with respect to that issue. But they're always going to be subpoenaed. They're going to come in, and we deal with that all the time.
Okay. So if you're a trucking insurance carrier, okay, if you're in the business of insuring trucks and commercial auto fleets, you have three options right now. First of all, okay, you can't predict where the severity is going. The trend is not good. So you sit here and go, what can we do about this? Well, you can leave the market, and there's been plenty of insurance carriers that have left the market in the last few years. Probably 4 or 5 years ago now, AIG's Lexington unit was the 800-pound gorilla in the excess space. They said, you know what? We don't know what the heck is going on. We're just going to take our ball and go home. And then others followed in the primary space, Zurich, et cetera. There's been a number of insurance carriers that just said, we're out. We're not going to do this anymore. You could raise your rates. You can just say, you know what? Doesn't matter. Everyone's getting a 20% rate increase. That's how we're going to deal with this. And we're going to see what sticks. Some people have been doing that. Or you can be more selective. And the trick in underwriting, again, when you're trying to predict the future, is to really try to analyze which risk is better than another one. And that's really about identifying the motor carriers that are doing it right? This is the good news. And I feel like up to this point, it's like, okay, other than that, Mrs. Lincoln, how was the theater? But this is a significant opportunity. I view it this way, all right? The market is hard. Rates have gone up. Why, though, if you're a motor carrier, would you want, if you're a motor carrier and you're trying to do it right, you're trying to follow the rules, you're trying to have a culture that, celebrates your drivers doing things the right way, incentivizes your drivers to do the right way, you're trying to hire and train and recruit and manage a business the right way. If you're doing that, why would you want the guy down the street who doesn't do it the right way, who cuts corners, who's a cowboy? Why would you want that motor carrier to be able to buy cheap insurance? You should get what you deserve. And that's really what we're seeing now is the shakeout in insurance carriers that are getting a lot more selective in really trying to figure out which motor carriers are doing things the right way. Okay, along with that, here's the good news too. If you are doing it right, there will be a competitive market for your risk. There always will be. Okay, we are a for-profit business, for-profit industry. And there's a lot of smart people. There's a lot of dumb people in the insurance world that maybe don't know what they're doing, but there's plenty of really smart people too. And there will be a market for well-run motor carriers, okay? Technology, and man, we could talk about cameras for the next 5 hours. We won't. I get very worked up and passionate about cameras. Two-way inward-facing, outward. I love the camera technology. It's a game changer. It's pretty cool. But you get very passionate people on one side or the other. Point is, technology is going to really start to make a big impact here. Not only with, the stuff I mentioned earlier, the rear end avoidance and lane changing and all of that, and eventually autonomous, and that stuff will absolutely be a game changer. The people who are being proactive and figuring out which technologies to invest in, how to manage them, there's a lot to evaluate. But if you're doing it the right way and using the right tools there, it's gonna make an impact and separate you.
On that note, I never have seen this, but it's now commonplace. Accident reconstruction experts, sheriff departments, police are all using drones now. It's drones with accident reconstruction is taking place all the time that I didn't see in the years past. So we'll typically subpoena, get the accident reconstruction file, just have one recently, where all of the footage, the aerial stuff, is via drone that the police department is using with respect to their initial investigation. And then when we, on the defense side of the claims attorney, hire an accident recon person, they're using drones to get the aerial view of things, either the day of the crash, if it's a fatality, I've got one now that just was employed, or thereafter to kind of get the set of the scene, direction, location, obstructions, everything. So the drone technology is unbelievable. It's used all the time now.
Yeah. And the cameras are getting so much better, so much faster. If you look at what they're doing now with Samsara Smart Drive, Netrodyne, Lytics, the artificial intelligence that's now being built in to the cameras is really cool. We had a client of ours that 2 weeks ago sent us a video that blew my mind. They have one of the latest cameras with artificial intelligence technology that is looking inside the cab and monitoring the driver's eyes. So it can tell if the driver takes his or her eyes off the road for any extended period of time. Our driver was going down the highway at midnight. Weather's clear, there's no traffic. He's doing the speed limit. Everything is great. Camera sees the guy doing the speed limit, and he reaches down and pulls up a book, literally a book, and starts to read a book while he's driving 65 miles an hour with a fully loaded trailer behind him. And within 5 seconds or whatever, the chime went off and said, hey, your eyes are off the road. Now, normally it'd be the guy dozing off, right? Or looked at his cell phone or whatever. This guy decided that he was going to read Moby Dick or whatever the heck he was reading. And of course, it uploaded the video. We saw it. And then you can you can change that behavior with that driver or get rid of the driver before that driver kills someone. Last thing here, this is where we're going to spend some time. You can do all these things. You can invest in the right technology, really care about culture, you're managing, coaching your drivers, that kind of thing. But if you're using the wrong risk financing tool, then you are just a buyer in the market. You're a commodity. You're getting whatever the market will give you, and you've got to be smarter about how you finance the risk. Here's what I think is the really big opportunity for a motor carrier right now, and how you need to view this. That it's a simple equation. If you're proactive on managing and mitigating risk, and then you use the right risk financing tools and partnerships and lean on the right experts, people like Tim Sheridan's firm and Jordan and the team at OVD, that will give you a cost of risk advantage or cost of risk leverage. Another simple analogy would be, it's like if you're an over-the-road fleet and you try to do everything you can to maximize miles per gallon. Okay, you can't control the price of diesel, but you can do some things to take advantage of when the price of diesel rises. You can trick out your trucks with all the latest, greatest. You can try to incentivize your drivers to drive really gently. And if you then can average a higher MPG than your other over-the-road competitor, you want the price of diesel to rise. That is the same analogy here. It's very similar. And so that's where I think you got to have that same mentality that the rest of the world is starting to deal with this. Poorly run motor carriers are not able to buy cheap insurance now. So now you have to be savvy and take advantage of you doing the right things. Okay, I'll expand on this a little bit. Proactive risk management, what that means to me. And again, I'm giving the 30,000-foot overview here in an hour and a half. This is something that you need to have in-depth conversations with your agent, with your insurance carrier, and really try to dig deeper on some of this. Proactive risk management, what does that mean? To me, it means, number one, getting your house in order, no exceptions. The biggest problem that we see, or I would say the biggest ticking time bomb that is out there, are the motor carriers that say, we're going to keep this driver. Man, we just need to fill the seat. He's a great driver. He's a great guy. He made a mistake. I know he doesn't fit our guidelines, or I know he had a DUI a couple years ago, but man, we need to fill the trucks. That is the nuclear verdict. That's where, even when you're not at fault, facts don't matter. That's when the skilled plaintiff attorney using reptile theory says, well, you've made exceptions in the past. You clearly don't care about the motoring public. You need to you are opening yourself up to the big verdicts when you don't have your house in order and you make those exceptions. Safety culture. I've met with, I don't know, hundreds of trucking company executives over the years. I can tell the owners and CEOs and presidents who care and are aligned with their safety department and those that are not. You can tell right away. If safety is neutered and they're not on the same page with dispatch and they are at odds with each other and safety is an afterthought or something we just got to do because, you got to check the box. Safety needs to come from the top down. When ownership is invested and they support their drivers in the right way, giving good feedback, coaching, when they truly care, that is a good thing. But you can tell when there's a disconnect there.
In juries, Chris, juries know that too. If you do have to try the case, when you have ownership, a safety director, and the driver all saying the same thing and being genuine and sincere with it, you can tell, but most importantly, juries can tell. They can tell when that is the forefront of that particular carrier versus others that just, it's an afterthought, it's just going through the routine. Again, that comes down to it. We don't try a ton of trucking stuff because frankly, they're difficult cases, but when you do, if you have from the top down that type of level of commitment, sincerity, it comes across. The juries see through it. When you've got a 12-person jury, as we do in Michigan in trying cases, they see through it and they know what they're dealing with. And it counts. It counts a lot, particularly when sometimes accidents just simply happen. There's nothing egregious that takes place. You want to be defending a carrier and an organization that has that level of commitment, and it comes across. And you can't fake it. You just can't.
I met with, a couple weeks ago, I met with a pretty large motor carrier, several hundred units, and it was, it amazed me. I sat down with their CFO and 3 of the folks on the safety team. And the CFO, we were talking about, you know, the predicament they faced with rising insurance costs and how they were facing a significant increase at their renewal. We didn't insure them, but they were getting we were you know, kicking the tires on their risk. And sitting there with the CFO, he told me, as we talked about, you know, trying to do things the right way and make investments, and he was upfront that, you know, the owner who wasn't there, he just wasn't ever going to do cameras. He wasn't, you know what, this stuff, that was I don't know, it's too expensive. It's no, and on and on. I mean, there was plenty more examples. And the safety people, you could tell, I mean, and they opened up a little bit later after the CFO left. They said, yeah, I mean, you know, they don't listen to us. Dispatch doesn't listen to it. It's just, and I was like, man, this is a big motor carrier that is going to get crushed someday. They are a ticking time bomb, and that's they're out there. That last bullet right there, you know, there's a lot you can do to manage and mitigate claims once they occur. Having good counsel, having good relationships with your insurance carrier, your broker. Obviously, you want to be on top of these, and like we talked about earlier, making sure that your drivers are prepped for any kind of deposition, your safety personnel, anybody that's going to be interviewed. That stuff matters a lot. It is very frustrating. I'm sure that there's plenty of people out there that have, you know, claims that are there, have kept them up at night because, you know, you didn't do anything wrong and you might end up settling for a few $100,000 or something like that. And it is a tricky thing to manage a claim when you're sitting there going, well, there's a 20% chance that this verdict could come back for $1 million, a couple $1 million. Should we take that? Should we risk it? You know, or should we try to settle this thing for $150,000 now? Those are the conversations you need to have and face those tough decisions, but you need to be on top of that stuff.
Having you know, really well documented files with the drivers, you know, we typically, I'll routinely have, hopefully the carrier has a personnel file for the driver and a driver qualification file, 2 separate files. They're kept, they're well maintained, documented, so that, because all that stuff is going to be asked for in written discovery. And that paper trail from the moment they interview to the screening process, their prior employers, all that stuff comes into play and can really set a nice story if it's positive and well documented in terms of the steps, the reasonable steps the motor carrier took in terms of recruitment, retention, hiring drivers, and their path, which really helps out with respect to documenting accidents. All that stuff is certainly discoverable and asked. Whether or not it ever comes in, if you try the case, that's something we fight about with motions and limine. But having a well-documented personnel file and driver qualification file makes our job that much easier and presents, kind of as Chris said, a very well-tuned motor carrier from the safety people to the executives to the drivers, all on the same page versus having absolutely nothing. We don't keep personnel file. We don't have a driver driver qualification file, we just kind of wing it. Less paper and less documentation really makes it difficult. In Michigan, the statute of limitations is 3 years. So you're talking many times, we're not seeing on the litigation side suit filed until, usually many times it's usually 1.5 years after, 2.5 years after, but up to 3 years. So having all of the ducks in a row with those two components of the driver's file is helpful. Same thing too, once the accident happens. I mean, as much documentation as possible. Drivers I work with that literally have cameras and document the scene is huge. It's tremendous and helpful. The one I talked about before, a crash I had on I-96, skid marks were actually taken photographs by the driver because there was clearly an earlier accident in the same area that had nothing to do with the accident that I was then defending. And that driver took photos of those skid marks to demonstrate these were already here. These were pre-existing. You can never have enough of that type of documentation, be it with incident report, with photographs, you name it, right then to preserve that stuff. Because with a 3-year statute of limitations, by the time that lawsuit, that claim hits our desk, all this stuff is gone. So photograph, document, write down, get names. Many times witnesses arrive on a scene. I've got a case right now where a witness arrived on the scene and is very supportive to my driver. He took the name down, took her number, and I'm able to follow up. That person was not listed in the UD-10, the police report, but the driver had the foresight to get that identification, and was very, very helpful. But the photographs are incredible. Now to have photographs right after damage, et cetera, the scene is huge. So when I have that, it makes my job a lot easier.
So step one is that having your house in order, trying to mitigate and manage risk. And the second part of the equation here is how can you intelligently finance the risk? I would try to implore you, and it drives me nuts because the insurance industry is its own worst enemy. We turn on the TV and we see every 30 seconds, 15 minutes can save you 15% or more. Insurance is highly commoditized. We are taught to shop, to view it as an annual purchase, as something that you have to do, and just you buy it and then you forget about it. It's aggravating. It's not a fun process. I work in insurance and I hate paying for my own insurance because it's frustrating. I get it, but it's certainly nice to have. And the point is, you got to get out of this mentality of just buying on the annual hamster wheel. You need to think about, how do I really finance and manage that cost of risk? Cost of risk is very different from insurance. The motor carriers that get it think about cost of risk and how do I really stabilize it, reduce it over time so that I can make my cost of risk more predictable and hopefully less than my competition, okay? And there's ways to do that here. And what I mean is, number one, do the math, okay? This is where, if you're a motor carrier and you have 50 units, 100 units, 200 units, it's not a question of if you're going to have a claim, it is when. It's a mathematical certainty. The law of large numbers that you learn about in high school statistics it's what all of our underwriting models are predicated upon. So when you start to really analyze the math and the risk and look at, okay, what can we reasonably assume will be our claims going forward? How many claims are going to be little claims? Most claims are little claims. There's a bell curve, right? Most of them are little. You knock over the mailbox or you have a little fender bender. Most of them are that way. Those are the claims that you can more often control. Through who you hire, how you train, what kind of technology you have, you can try to control the little ones. If you can control the little ones, hopefully you control the big ones. Frequency breeds severity. Every once in a while, though, you have the big claim. And so you got to start to understand the math, how much risk is predictable, how much you should retain that risk via a deductible, a captive arrangement, some sort of hybrid or retro type program. There are insurance options that will allow you to retain the predictable layer of risk, the layer of risk that you can control. And if you do that, then you will benefit and not the insurance carrier. The goal is to try to assume a reasonable amount of risk so that you make the underwriting profit in investment income and not the insurance carrier. And then you cede away or you transfer away the high limit unpredictable risk. And it's about, I think it's funny, again, 15 minutes will save you 15% or more. Our industry is conditioned to, and I will bet there's plenty of people out there who get a call every day or every week from an insurance broker that knows nothing about your operation and says, I bet I can save you money on insurance. I don't know how they would know that exactly, but it's a very price-driven type of sale often. I think about it this way, though. I don't know why you would want to use the cheapest attorney or the cheapest CPA. You want an attorney who is really good, who is going to tell you where the pitfalls are, where, the different strategies and ideas that you might not have thought about as an expert. Same goes with a very good insurance broker. There are great insurance brokers out there that are going to help explain and educate the different ways you can finance the risk, the pros and cons, instead of just saying, here's 5 options, let's choose the cheapest. Because price is what you pay and value is what you get in everything in life, right? So you need to find good partners who understand what they're doing, get their advice, try to educate yourself, and look at the options, especially now. What options are there so that I can retain a reasonable amount of risk and I can start to better control my costs down the road? So the guy who is just a price taker, i.e. just buying insurance year to year, that cyclical insurance cycle, that person is going to end up ultimately paying more, because the difference is somebody is paying $5 a mile or $10 per 100 miles in the regular insurance market in a guaranteed cost type of program. And then there's somebody else who might be in a deductible or captive type arrangement, and maybe they pay the same price, but over time they're seeing money come back because they were in a captive and they got a dividend or underwriting profit back, and their net cost of risk isn't 5, it's 4. That's the idea. So I'm going to close with a thought on where the industry is going, and then Tim's going to talk about negligent entrustment, and then we can do Q&A and any other question or whatever. So who is this right here in this slide? Billy Beane. I love the movie Moneyball. It's a great book. It's a movie that's almost as good as the book, actually. But Billy Beane obviously revolutionized. Well, maybe not Billy Beane. It was sabermetrics, right? But Billy Beane really was the first one to take the idea of analyzing data and statistics and really rethinking baseball and all the sacred cows that have been held for decades in baseball and totally rethinking them. We are in the same, I guess to strain the analogy further, we're in the early innings of moneyballing the insurance industry. There is an unbelievable amount of data being spit off the trucks through all the telematics devices. My company, National Interstate, has a huge initiative to capture all the data as much as we can. And the idea is capture it and then weaponize it. Weaponize it meaning we start to pair up all the data on acceleration and hard braking and weather patterns, traffic patterns, time of day, driver profile, claims patterns, all of that stuff, so that we can moneyball where the claims are going to be. Rather than looking through the rearview mirror and trying to predict going forward, we're saying, there's the red warning flag that is flat, or the warning light flashing right here, because we know that this is the highest risk behavior, whatever. And so that is where the industry is going. And there will be those that get left behind and those that figure it out. And so it's going to be very interesting to see what happens here in the next decade as we start to really harness a lot of the data that is now being captured. and you will want to be with an insurance carrier that helps you get insight into what the data is saying. Gives you benchmarks. It helps you be able to better price where the risk really is in the different lanes that you travel. You may find out so that when you're evaluating a new lane or a new shipper, that man, that one comes with, that lane right there has got a 20% higher cost of risk. I need to bake that into my model. I need to charge for it. Or this one, oh man, I know that lane over there, that whatever, that's a better cost of risk. I can be more aggressive in my pricing and outsmart the motor carrier who doesn't understand that. Like anything, this insurance market is making the strongest stronger and the weak get weaker. The strong in the insurance carrier space are getting stronger, the weaker getting weaker. So it applies to both insurance carriers and motor carriers. And again, I feel like, can't stress enough, trying to find good partnerships and really lean on those partners to help you make good decisions. And for those of you that do that now, that are using cameras, that are I applaud the efforts. It is a hard job. It is a difficult thing to run a motor carrier well, for sure. It is not easy. This stuff is easy for me to say that the insurance market is hard and it's an opportunity, but I get it. But the strong are going to get stronger, the weak are going to get weaker. So,
okay. The thought was give a little bit about negligent entrustment and what that is. Can you hit the button that puts up there the definition? It is certainly a viable claim in Michigan. Just a little bit of backdrop here in terms of how Michigan works. If I'm boring some folks that are not in Michigan, but Michigan's a no-fault state, so we deal in that realm. It has been since like 1972. We had a big change in Michigan this past summer in terms of trying to control the first-party stuff. In a long story short, kind of a summary, in Michigan, there's no-fault statute been in place. You have a first-party claim and you have a third-party claim. Typically, with the trucking work that I do, I'm defending third-party claims, which is plaintiff against the trucking company as the owner of the semi-tractor trailer and the driver. Invariably, the owner, the trucking firm, and the driver are both named in a lawsuit, and that's a third-party claim. If that plaintiff who's injured and fractures her femur she goes to her carrier, her own auto carrier, for three categories of losses: for wage loss for 3 years, for medicals for lifetime related to that accident, and for what we call replacement services. Those three categories in Michigan with no fault, you go to your own carrier to get that. You're not going to the other driver or the other alleged at-fault entity. So the first party claim is when Mrs. Smith injures her femur, she submits all of her medicals, her own carrier pays those medicals for a year, but then says, we're done paying. Your femur fractures are healed. We're not going to pay for your knee, was pre-existing. We're not going to pay for any more PT. We're not going to pay for any more occupational therapy. And she brings a suit on the first party side. The third party side is, again, Mrs. Smith versus the trucking firm and the carrier. Typically, what a plaintiff's firm will roll into, along with a straight negligence claim against the driver that's there, and also an owner liability claim against the trucking firm, is they'll bring in a negligent entrustment claim. And it's viable. It's a whole separate claim in Michigan that we deal with. And basically, as the definition indicates, if you give permission or ownership to drive a motor vehicle, in your case, a semi-tractor trailer, that entity, the carrier that entrusts that with a driver, if they entrust that vehicle with a driver that's either inexperienced, not skilled, not properly trained, etc., there's a separate claim, a separate cause of action involving negligent entrustment. It basically deals with the owner permitting an inexperienced or improper driver to be driving. The traction with these cases comes into play, or that claim is, and it gets back to what Chris and I have been talking about. If you've got a driver with a poor record, you've got a driver with lack of training, you've got a driver with inexperience, that negligent entrustment claim is going to get some traction, and the plaintiff's attorneys are going to push that hard at a mediation or if it goes to trial, they're going to push it hard there. And it'd be a whole separate cause of action on the jury verdict form that they could recover. So what you want to do is, again, it gets back to documenting your drivers in terms of training, their hiring, their driving record, their skill set, all those things. So all that stuff is there. And then, frankly, as Chris alluded, making tough decisions. If drivers need to be off the road for some period of time for more training, if drivers need some additional training with regard to particular types of turns, particular types of driving, or simply need to be let go, it's a far more wise decision to make those types of decisions than to have a paper trail that really is going to be fodder to the plaintiff's attorney with a negligent entrustment claim. Again, I see it pled quite often. Most times it's not pushed too hard by plaintiff's attorneys unless they have all kinds of stuff, be it the inexperience, the lack of training, no safety training, whatever, that they can really push it. And you can think of it as this way. If you ever do get to trial, typically jurors don't want to really target and go after a driver. It's a single individual person, Mr. Jones, Mr. Smith, Mrs. Wilson, whatever. But when it's the entity, the carrier, ABC Freight Line or whatever, they're more apt to push that because the sympathy factor is out the door and the deep pocket argument is made. So if a plaintiff's attorney, the negligent entrustment claim goes to the carrier, if they didn't properly provide to their driver that semi-tractor trailer, be it lack of training, lack of experience, et cetera, maybe that should have been hired. They push that envelope, that's going to be difficult for the carrier. Again, that's where the jury simply, there's not a whole lot of sympathy for that big carrier. They do for the driver. But in terms of negligent entrustment theory, the plaintiff's attorney, it's really kind of a second bite of the apple at the motor carrier. And we deal with it all the time. And it's something to be aware of. It's viable in Michigan. There's case law. The most recent case I pulled was not really particular to this situation, but it was a rental car company, Enterprise, that a renter comes in, rents the vehicle, and then gives it to his daughter to drive the rental vehicle. And the father who rented the car tried to get out of the case, brought a dispositive motion arguing, hey, I wasn't the true owner of the vehicle. Enterprise was. Plaintiff's negligent entrustment case against me should be dismissed because I wasn't the owner. The Michigan Court of Appeals back in January of 18 said you don't even have to be technically the owner to have a viable negligent entrustment case. You simply have to be the supplier of the motor vehicle, provide it to someone else, and they then do something wrong. They're negligent in their operation. If they were in lack of experience, lack of training, not driving properly, have a bad driving record, and you knew of that, you had notice of that, that negligent entrustment case is going to prevail. It's going to go to a jury, even if you weren't the title owner, weren't the registrant, but you supplied it to them. I think in our case with motor carriers, that issue is not really going to be in the plaintiff. They're going to be the title owner, have ownership control of the semi-tractor trailer. So again, it gets back to hiring well, training well, documenting very well, so that any type of push by a plaintiff's attorney in terms of negligent entrustment will be deflated, frankly, because if they get some good stuff there with respect to that, their focus then is going to be on the carrier, and that's going to be difficult. So that's that theory. I don't know about other states, but in Michigan, it's a viable cause of action. It's not woven into a negligence claim, and it can be pled separately.
Well, on that note, so one of the questions that came in that we'd like to maybe get both opinions on, many motor carriers will hire a third-party safety consultant to take on a lot of that work. And when that happens, Chris and Tim, how often should that safety consultant have interaction with the management team, and how do they use that safety consultant and still insulate themselves from that culture that we talk about, making sure that they're having that culture from the top level, so using a third party?
Yeah, that's a tricky one. I see that sometimes, and I think there's pros and cons. The pros can be that the third party can be viewed as, hey, this is what the safety people say, the safety consultant says we got to follow this. It's kind of the way it is, People use the insurance company saying, well, the insurance company says we can't hire you because, whatever. So it can be kind of like, someone to sort of use to say this is the way it ought to be, and we've got to follow what he or she says. The downside is sometimes you don't get like real true buy-in when you have, safety personnel that are truly invested, or that it's woven into the culture, that you're kind of farming it out. So I don't see it a lot. Well, I see it a fair amount, but especially with maybe smaller mid-sized fleets. I see pros and cons to it, and like anything, I think that it's just if you're the owner, you need to empower whoever it is that has oversight on safety to influence operations. And those don't need to be mutually exclusive. The safety and operations do not need to be mutually exclusive. They can be symbiotic and really work together to allow you to be a profitable motor carrier. That's the truth. It really is.
Good question. I've seen that more in the context of construction. I do some construction work as well. So I'll have construction managers or general contractors hire a safety consultant who a 2 or 3 year project will be involved in daily and monthly inspections and stuff and giving feedback. I've used that in cases I've had as a positive, because my client construction company is proactively getting involved a consultant. I'm trying to think out loud. I don't think I've seen it. Any of the motor carriers I've defended over the years have had that. I've seen them more, as Chris said, the in-house. I don't see it as a downside. I would argue, if I'm defending that carrier, hey, they're taking a proactive step, paying money, resource to have another set of eyes come in and give input and give direction to supplement their internal. I do agree. I can envision maybe the buy-in is not as strong that it could happen. Now, from a legal standpoint, the thing I always think about, be careful of what communication takes place between that consultant and the carrier, knowing that the claims attorney is going to know at some point in time through discovery, there's a consultant, ABC Consulting Company, has now been working with our safety department for the last 5 years. So communications there are likely going to be discoverable. But I don't think it's a negative. I think it's a positive. I would, if I'm defending, so that my position to the jury is going to be, or to me, is going to be, listen, they take it so seriously, they took paying money for another set of eyes and ears to give them input and consultation. And whenever I have drivers that go to different seminars, through different carriers, through third parties, I'm always pushing that hard so that they're telling when you went to training, how often it was, how many hours, how often you're doing it. The more training, the more of that type of stuff that comes out from the driver, it comes out it's much better than someone. I haven't been trained on. I was hired 5 years ago, and basically it's on the job training for about a day and a half, and they gave me the keys, and now you're rolling. That doesn't typically go over as well as someone's getting some type of frequent training updates, be it by some other third party.
I think, Tim, you had mentioned too, and you've seen it where the litigation attorney will use the argument, Mr. Driver, do you think that if motor carrier would have given you more training, this accident would have happened? Do you speak how that can have an impact on the claim?
Yeah, it gets a little bit to the reptile theory in terms of, again, the plaintiff's trying to make the jury or the mediators trying to resolve the matter, the ultimate, safety person. And it just, you got to sit down with your client, the driver, in depth prep, well in advance of the deposition, get hypotheticals and not go down the primrose path, and to be able to say, no, that's not the case. I've been to 3 different training things. I've attended all of them. Here's the sign-in sheet. Here's the areas we covered. And I attended those things. But, they're going to try to plant the seed that more could have been done, and there's additional steps that could have been taken to avoid, to make this motoring out there completely 100% safe. And he said, no, it's inherently dangerous to be hauling on an expressway at 65 miles per hour, a semi-tractor trailer with a 53-foot trailer. Their actions are things that you just simply can't control. The weather, the speed of other vehicles, the road condition, et cetera. So, but that leading questions like that will take place with skilled plaintiff's attorneys to try to basically turn the tables with respect to the driver. And that's where the depth prep, going through hypothetical stay firm. You got to stay firm. We can object during depositions. Typically in Michigan, really the only thing we can do is object to form or foundation of a question. We can't coach. We technically can't give leading objections. But hopefully, if you prepared your client, the driver, well, they know from the objections you're making some input in terms of where to apply the brakes with the questioning.
So documentation is key, and starting today. If you haven't begun doing these things, start today working on a plan. Because, showing a good faith that once you've learned that there's a benefit to doing these things and doing them moving forward is going to help in that difference as well.
When I get a well put together personnel file and driver qualification file for a driver, when I get a new case, it's huge. I tell right away this company's got it together, organized, and it's all well put together, a separate personnel file, a separate driver qualification file. Has the application, has the due diligence they did before with hiring them pursuant to the federal regs. It has all the actions documented, and it really presents well. All of it's discoverable. To have all of that documentation versus little or none, your client just presents that much better.
Yeah, on that note, I would say that a good safety manager is worth her or his weight in gold. They really are. You can't view that function as, an afterthought or give it lip service. And that's the danger, I think, of hiring out to third parties. It's like, okay, we're checking the box and we're kind of giving it a little bit of lip service. Good safety person is really going to inspire your drivers to do the job well and want to follow the rules, and is going to not just be, the cops and using the stick instead of the carrot. I mean, that safety person is going to help your drivers understand that, hey, you have a tough job, but you are a professional driver, and this is a big deal, and this is why we do what we do, and this is how what you do affects the company, and affects your fellow drivers and your fellow employees. We want you to get home safely to your family. We care about you. This is why we want you to do these things. And so a good safety manager is going to, be able to discipline and coach the right way, but also inspire and help people see why it is they want them to follow the rules.
There's a lot of public information that's available about motor carriers today, right? We talk about the DOT, FMCSA websites, all that information is public. Can we, both of you, get a little bit of perspective on like the CAP reports and how that impacts decision making from a defense perspective and from an insurance perspective?
So I made the analogy of the big wood paneled office that the plaintiff's attorney firm is sitting in on Monday morning saying, which of these files here are we going to go after? And the one they're going to go after is the one that's got the CSA score that's in alert. That's the one they go, oh, we got this one. This one, the facts aren't great, but everything looks good. That looks like a clean carrier. This one, boom, we're going to make something out of this one. And so as an insurance carrier, you have to take the data with a little bit of a grain of salt, because I understand how CSA scores can be gained, and I get that there's that it's not perfect, okay? So we understand that, and we're not just going to dismiss somebody because they might have a higher unsafe driving or whatever. I mean, we might, we take that all into consideration, but we do notice that, and you do need to be aware that if you have alerts, you're now on the radar.
It's out there. It's known that the plaintiff's attorneys, they search it. The other thing that I think people know is the social media is searched big time. I mean, that's one of the first thing I do. It's typically more advantageous for us doing defense work to get the social media of the plaintiff and their family. But there's no doubt in my mind the drivers out there, they're being named in the suit with their motor carrier. Their social media is going to be searched, and it's going to be searched between Facebook, Instagram, you name it, Snapchat. It's all looked into, and basically my advice, and I know plaintiffs will say to their clients, but shut it down. Once incident happens, shut it down with respect to that incident, because it becomes huge fodder for attorneys. When you're taking their deposition 2 years after the accident, they're posting, I'm taking the deposition of plaintiff who's claiming A, B, C, D with injuries, with regard to wage loss, with regard to restrictions, with regard to all kinds of stuff. and you've got Facebook posts all over the country, traveling, taking trips, amusement parks, different things. The same thing is reversed. The plaintiffs' attorneys are looking for the social media with respect to the companies and the drivers, and looking to use that in the litigation process. And it's out there, and everyone needs to be aware of that because it's being looked at.
Well, thank you, Chris. Thank you, Tim, for taking some time out of your schedule to visit with the team here at Oliver and Deck and all those that have tied in. We had a great turnout, so we appreciate you taking some time from your day to do that. And no doubt, as you think about some of the things we've talked about today, there's certainly some things maybe feel overwhelming. There's a lot of pressure coming in against any sort of fleet or motor carrier, and sometimes you feel like just giving up. And that's certainly not what we're wanting to do. We really want to instill in you the confidence to know what the enemy is throwing at you, so that you can respond to that and pivot and be a successful motor carrier. As you think about some of the things, maybe you took some notes today, and you would like some help with kind of taking those steps to align your organization and insulate it as best as possible from the negative things that are going on out there, please feel free to reach out to the team at Oliver and Dyke. We spend a lot of time helping our clients and prospective clients as well to identify opportunities where they can insulate themselves, create a plan, and then execute that plan so that you too can become one of those carriers that has that competitive advantage in the marketplace. So again, on behalf of the team at Oliver and Dyke, thank you for tying in, and we hope to see you in person at our 2021 Transportation